Welcome, traders. Thought it was best to come over and review exactly what happened with the VXX systems, the euro currency, gold, as well as a few others. I want to introduce you to a swing trading system on Amazon, which I think is pretty exciting. First and foremost, let's take a look at what happened with the Fed and the VXX. Now, the VXX, again, is an exchange-traded note on volatility. As you can see, we came in short. We were thinking we needed the market to go down a little bit more to hit its max profit. Otherwise, what did I say? It has a trailing stop function. So in other words, if the market starts to move off its profit, it will trail out. It's exactly what happened. We did get stopped out. If you notice, though, it didn't go long. Why? Well, over here, we had a similar situation. It was short, it held on to that short position, and it had a trailing stop function, but what happened? Market gapped higher, and it went long. So it knocked out with a new fresh long, and from about where maybe the stop, X is a symbiology for stops, and where the long is, you'll notice the distance right there, okay? The distance or the amount of money that would be set for that trade, and from where perhaps we're going to generate a buy signal on the close to perhaps where the stop is, you'll notice it's just a little bit, about 1.5 times greater. Two functions may have occurred. Unless the market opens and we have a defined lower risk, if this is the risk, it's too great for the system. In other words, we have pre-programmed what's the best, most profitable element of this trading system. That's a good metrics to know. You can optimize that with the settings that we've created, so that you can say, gee, if I'm risking 1% of a $100,000 portfolio, or 2%, which is $2,000, if it's anything greater than that, ignore the trade. And so that's a very very powerful function to have in any trading system, and that's what we've done. So I thought it'd be neat to see what happened to the system. Did it make money? Where are we right now? And for the year, as you'll see, this thing closed out another new equity high for the year. Performance graph just does it again. So this is something that's real easy to learn. I mean, if you have a mouse, if you have money in a trading account and you know about exchange traded notes and exchange traded funds, this is not a leveraged ETF per se. It's an exchange traded note that trades off of the futures of the CBOE's VIX contracts, and those trade off of the VIX, which is the index which trades off of the S&P 500 valuation of puts and calls, the options on the spiders. So with that stated, this has a couple functions. A, it has a contango crush element. That's something that's very easy to learn, as well as the volatility function of the market. If the stock market doesn't go down or doesn't go up, there's no real volatility, there's no real fear in the market, the VIX will go down. If the VIX goes down, this product goes down. So by nature, it's designed to do one thing mostly, and that is to decay in valuation month after month after month. Now, we would want to more than likely in bull markets, in the beginning of a bull market, not have the long function turned on. You would only want to take shorts. So this could be a long or a short only product. Since we're 9 years into a bull market and we are seeing volatility, we absolutely want to have longs. Now, we have had some decent long trades, and just to share with you, had one over here and had one over here, and it got stopped out, and then it got right back in, and as you can see, it has taken a few long positions that have been profitable. There they are, right? And that's just since February. In February, what happened when we had that big volatility surge? Let me bring this into focus, and I constantly share this with you, but again, it has not been optimized for a once-in-a-lifetime move like this. It took its max profit, unfortunately, and left about a lot of money on the table, I'm here to tell you, but it also was able to capture a short. It went long, it went short, so it's traded around and made money, and therefore here we are with a year-to-date profit, which is something very respectful. So let's take a look at the year-to-date type of performance. We can look at the periodic returns real quick. This is the daily. Let's look at the monthly. How about that? We'll go to the monthly. So we have 8,000 for January, you have 40,000 for February, so far 36,000. Last year you had a drawdown in November of 16,000, December not so good, 5,000, but look at all the preceding months of profits. So now let's go to an annual and look at how does it end at the end of the year. And so since inception, based on a $100,000 formula or starting account basis, this thing has done insanely well. So if you could learn to trade one product and one product only, this is the start. And the reason why we are launching a fund on this, it's not because we're just discovering volatility. We've been trading this thing for well over a year. I've been teaching this at seminars. In fact, 2 years ago at the Money Show in Las Vegas, we actually gave just a huge audience that was there for all the Thinkorswim clients, because we have our PPS indicator, the person's pivots and the PPS indicator on Thinkorswim platform. I introduced this to them. They were amazed. So there has been an increase in education. And like I say, some people don't want the retail traders to get bogged down with something that's complicated. And this really isn't that complicated. This isn't something that's very difficult to learn, number one, and it has amazing results. Now, let's look at other markets and how they were impacted, and the trading system's performance, how it held up with the FOMC meeting, because that was quite interesting today. All right, we're going to start with gold. Right before the meeting, I had provided a video showing, hey, here's what the positions are going into the meeting. And you may remember I said, hey, it's short gold, and I said it could get out, and right before the meeting, gold, it wasn't really doing a lot, but then what happened? Gold dropped, and you could see it clearly got out of the position. It went long, it took the profit, and then we had the Fed meeting, got a little choppy and sloppy. It went short, it got out with a quick loss, and then it went long, and guess what happened? It did what you want a system to do. When a market goes into a trend, you want to be in on that trend and hold it and ride it. This thing amazingly got out at its profit target, predetermined in its trading system. And you can see it's got several different functions. It has a profit target built in. It has a trailing stop function built in. It has that max trading kind of concept where after so many bars, if it doesn't provide a profit or if it's been in the holding periods too long, it'll also get out of the trade. So that's what it did. Let's look at the performance for today. All right, so this is another one of those examples of what I think anyone that wants to get into what is called an algorithmic trading auto execution product. You need to know, you have to be educated on a few things. You got to know there's rollovers. In commodities, we go from one front month contract to another. And so we've been trading February gold, and then as February passes and you're about ready to enter March, you can't be in February gold anymore. And the scans just had a little, we'll finish this up here. Well, we just got disconnected, and we're going to shut down. We're going to cancel and see if we can just finish this so I can just share the results with you real quick. Anyway, today was up about 2,000, trading 2 contracts. The month has done quite well. This was a rollover again, week to week, not every week, the first week or the week ending February 1st. Then again, we had 1 week where it wasn't a lot of performance whatsoever. And this is the total trading 2 contracts just for the month. Performance graph done pretty well for just 2 contracts of gold. All right, so that's gold. Let's look at the euro currency real quick. All right, here's the euro currency. So first and foremost, We have controlled and optimized the best time of day or times to trade. And you will notice here this thing starts to trade or looks for signals starting in the European session, right? That's 4 a.m. So to the left of that would be prior to 4 a.m. Now, you'll see it went short. It was able to capture. This was yesterday, Tuesday, the 20th, and then it doesn't take trades at this specific dead zone in the Asian session, and it picks up again. So here again is your European session. Had a small loss, went long, got out, went short, had a nice little profit. Now we come into what? Fed time. What happened? It covered the short position. It reversed and went long a bar before the Fed's announcement. And the neat thing is, it took a profit, it took its exit, and it took a trailing stop, and it still got out at about the same area. Ironically, it does this, which if it's a specific ATR, and you'll notice with the euro currency, we're at about an 88 10-day average true range. In other words, we only get about 88 points now. In the last 10 days, the euro currency's daily range is about 88 points. So this just happened to be near its daily pivot. Just so happened to be an event that caused the market to go up. It caught the long, and that's what you want with an algo system. If there's a buy signal, get me long before I can reach my hand over to that mouse and the market moves without me. And then when it makes a profit target that's, on average what its normal trends are, and on a 15-minute basis, then just get me out. And that's exactly what this did. So we're up here, as you can see. Performance graph looks pretty decent. The periodic returns for today, I mean, it's not like gold, but it's still a nice return for the month, once again trading two contracts. And it's not that active during the day. You can see, 4 to 6 contracts, and sometimes one if there's anything going on. The 17th, the 18th, the 19th, there's nothing going on during the Sunday night session. That would be Monday, and then again there it is. So it just lists the trades by day, which is nice. And that's what this green histogram represents. That's the strategy equity of between closed out, and then that pink bar is the open trade. When the two meet, you know that the system is flat. All right, one last one I want you to see, and that's the Amazon trade. All right, so Amazon, we've got two Amazons, and what's the difference? You'll notice here this one has a profit of 65,000 and this one has a profit of 68,000. What's the difference? Two different, not systems, but a new release version. The one on our right is the original version that came out. The one on your left is the new version, and it's titled, of course, and I'll share that with you. It's Algo System number 15. So number 15 is just been released, and what it does is it has more filtering mechanisms and better optimization of finding out, do we want to take a buy signal on a PPS? Do we want to take a high close doji? Does a market like Amazon, a stock, does it have decent rates of probabilities of success using PPS, which are the arrows, or high close dojis? And those are the things that we can absolutely backtest in the marketplace. Now, you'll also probably notice something a little fishy here, and you'll say, well, this one went long and this one short and this didn't take anything. Was it turned off? No. That's what I want to share with you. The difference is this is a 65,000 profit. This goes back. Let's take a look at the and we'll format and get this strategy up so we can take a little dive, look inside what it's built on. Here we go. So you'll see that this goes back since January of 2017. You'll notice it's a 60-minute swing chart or swing period, which was what we use, a holding period of up to 3 to 4 days. 359 trades, 170 long, 189 short. it has a profit factor. Obviously, it makes more money on the long trades than it does the short trades, and that's the overall performance of the original version. What about the new version? The new version, you'll notice, has a profit factor that's slightly better, 2.85. You'll notice it's a little bit more profitable than the older version. And here's one of the what I feel the best functions is it does a lot less trades. You're in the market less. It has a holding period that's better. It has better performance in the market, and it has taken less trades. So it does have a better filtering mechanism. It may miss some trades, but overall, in that same period since January of 2017, it has a better filtering mechanism. And so for all of the folks who have the licenses, and we created 78 licenses, we're down to 17. We're not heavily marketing this, as you all know. And for those people that do get this, anytime we come up with an update, because we use this product ourselves, we're starting a fund on the algo optimized settings on a few of the products. So we use this ourselves in trading. Now, when we update and have an idea, and when I say we, I have a partner, Ben, in Israel. We've been working together for probably 12 years or a little bit longer. I think it's 14 now, excuse me. So we put together with my ideas and work on strategies, and that's how we got together to put the person algo optimizing program together. That's the long and the short of it is. But when we come up with an update, that's what we try to push out. Sometimes they take a little bit longer, and you'll notice we went from the original version to now this is version 15. So we're not looking for any newer versions anytime soon. We think this is a pretty decent model that covers a spectrum of different trades. So I just wanted to give you an insight as to what happened with the markets, what's going on with other markets, and what did the Fed do with us today. And I think it treated us pretty well on an active trading day, especially in a very uncertain, turbulent world that we live in the financial community. But volatility is back, and that's the amazing thing about an algo optimizing product, or something that you can have to auto execute, or at least generate signals that you can see where's my entry. And that's one of the other functions that I wanted to just remind. When it goes short and it has this little orange bar, that's your stop level. These are your profit and your max profit targets. And so you can kind of get an idea if you have a clean setup. And even instead of taking a trade shorting Amazon, what you could do is actually use weekly options. If you know that if this is your entry, you know that you could be in a put or short calls. You know you can use weekly options, and so therefore, because it's a swing trading model, and you have right in front of you where the trade parameters are from risk to reward. So that's another way of using this for options traders. With that said, until next time, I hope you found this video insightful and at least to follow through with the results, because I think anyone that puts out the trades should follow up to see what the results were.